बोलने ही वाला है
No, I'll speak. I'll speak.
मोबाइल यूनिवर्सिटी है सर, आपसे क्या
नहीं. Yeah.
कुछ बोलेंगे सर? Let us check the public audience आपके लिए.
Okay. Hello, how are you?
Fine sir, fine sir.
Fine. You can start. I am ready.
Yes sir. We'll just check the public audience once everything is then. So, can you speak something sir? Let's check up the public audience.
Yeah, delighted to be here.
Thank you sir. We are blessed to have you once again. It's very difficult in your kind of busy schedule sir, but still you are taking your own valuable time to
It's a
spend with us.
pleasure to be with the Gandhigram Rural Institute, an iconic institute,
Sir,
which has been surviving since 1946.
yes sir. So now I will have a special invitation from our chancellor. We will invite you to next convocation as a guest.
Thank you. It will be my privilege and honor.
Fine sir. We are through. Our public audience has been checked and we are through sir.
Okay.
Very good morning to everyone. People those who are joined in this webinar and people those who are going to listen to our chief guest today in YouTube later stage also. I extend my warm welcome to everyone from Gandhigram Rural Institute, deemed to be University. We are here on the fourth day of 10th webinar series, and this webinar is also very, very important. We have come up with different subjects, eminent speakers to speak about those topics, and with the blessings of our speakers and audience, we are now international. We are present in almost 8 countries, and over 10,000 people have viewed, 1,000 view hours. These are all great achievements in 10 months. That's how this webinar is going to be. Today in this webinar series, we have a very eminent special guest. For the second time, sir is coming, Shri Shambhu Kumar Das. Das sir is a very well known profile, need no introduction, but still as a formality, introduction is there, is must. And let me introduce I should not say Das sir is a mobile university. I can proudly say as a student of Das sir. Dasar is a top financial expert, and in his career spanning over 4 decades, Dasar has advised several Indian corporates on their strategic and financial needs, especially raising offshore funds, be it equity, mezzanine, or senior debts in infrastructure, healthcare, hospitality, real estate, manufacturing, whatnot. He knows all the complexities of the and providing act solutions for those things. He is also well versed and had been associated with cross-border transactions. Thus, has hands-on experience and he knows the intricacies and dynamics of raising funds for India. Focused in private equity funds too from global LPs interested in investing in India, such as sovereign wealth funds, endowment funds, pension funds, private lending, and investment groups. Sir has also assisted and acquired a deep knowledge of setting up, structuring, and raising offshore private equity funds, alternative investment funds, and for investments in India by being associated with 5 AIFs. Currently, he has built a database of global investors, lenders, and their advisors which have interest in taking exposure in India in various sectors. Dasar is instrumental in setting up Transcontinental Advisors Private Limited, and by virtue of being CEO, he has provided leadership by building a very competent team, sourcing deals, developing financial model, carrying out soft due diligence, and interacting with the founder and investors. He has excellent track record in identifying potential investors and lenders, interacting with them, and arranging and mediating counterparty discussions. During his his 5-year term with Transcontinental Advisors Limited. He was associated with transactions over $500 million in infrastructure, real estate, manufacturing, and distressed and semi-distressed assets. Before joining Transcontinental Advisors, he worked as Chief Executive Officer of Orofin Corp and Torrance Capital. Thus, sir, as CEO of Concept 2 for 7 years, where he is involved in managing private equity funds in India. India advisors of $150 million who involved in managing private equity funds in India and advised several funds. Co-investment, nurturing, creating value for investment is his hands-on experience and he's expert in that. Sir has done MA Economics and has started his career as an officer with State Bank of India in 1979. Knowing Sir, I should definitely say when Sir had cleared his IRS, Indian Revenue Services, he had an option to choose between IRS and the banking sector. Sir chose banking sector. This is something many people doesn't know. After completing IRS, this is something this kind, but still back in India, he is now with us. He was a core team member of setting up a very successful private bank in India. He actually came from US for only that purpose. He has also been trained in Euromoney Institute in New York and JL Kellogg Business School in Illinois, London, and London Business School, IIM Kolkata, NIBM Pune, and American Business Association. He has also been a panelist in IIM Ahmedabad. Sir is based in New Delhi in India today, and I have always touched his feet to be there in the industry somewhere at some point in time. Thank you, sir. Thank you for being with us. You are, as usual, most welcome, not only in this, many webinars in the days to come also. I will come and disturb you, sir. Thank you. Over to you, sir. Sir is going to speak on the role of NBFCs in economic development of India. Thank you, sir. Over to you, sir.
Thank you for such an exhaustive introduction, Dr. Krishna Kumar. Before I start, let me express my privilege and honor to be associated with Gandhigram Technical Institute, which is deemed university. Very few people know that Gandhigram Rural Institute came into being in 1946, and it was one of the 14 institutes which were set up at that time. And our father of the nation was the inspiration for setting up this Gandhigram Institute, and it is the only surviving one. It also has the privilege of being inaugurated by our first president, Dr. Radhakrishnan, in 1956, and our Prime Minister Nehru at that in 1957 also rang the bell. And thereafter, in 1976, Mrs. Indira Gandhi declared this Gandhigram Rural Institute as a deemed university. Thereafter, the institute had received many visitors: APJ Abdul Kalam, Morarji Desai, Junior Martin Luther King, and so many. So it's a privilege and honor to be here and to be invited by this institute, and I express my gratitude to the most dynamic Chancellor, Dr. Annamalai, and other functionaries of the university. I also take this opportunity to express my gratitude to the winner of this webinar series, Dr. S.P. Krishna Kumar, and who has really created a niche in this webinar series in the country. I have been asked to speak on the topic, role of NBFC in the economic development of India. And for the information of the listener, I must say that our convener, Mr. Kumar, has been a doyen of NBFC and himself, and he has created a niche for himself in the vehicle finance area, and he is very well known, very well reputed, but his desire for academics made him switch career from a vehicle lender to an academician. So it's a great privilege having spoken on the university, etc. Now let me come to the topic of role of NBFC in economic development of the country. It's a tough topic, especially during this time. Things, economic activities have been very slow. The slow process started almost 2 years back when the economy per se was moving slowly. And thereafter, the lockdown in March of 2020 really disrupted the economic scenario of the country. And still, the second wave is continuing, and we are facing the problems. This is having in this background to talk about the role of NBFC becomes very important. But what is the economic development? We need to understand that, because economic development means different things to different people. But for a country, that ongoing structural changes in the field of infrastructure, in the field of manufacturing, with a view to create wealth in the country, generate employment, and above all, surplus in the hand of labor force of the country. That is one of the key, apart from other movement, expansion in manufacturing, in aviation sector, in whatever sector you take. So basically, and there are many ways to assess the economic growth of a country, economic development of a country. It could be national income, it could be GDP. Yeah? So this is the crux. So simply speaking, it means for a common man, it means, and for an economy in general, it means creation of employment, wealth, and savings. Keeping that thing in mind, we have to understand a little bit about the non-banking financial services. It's an NBFC and is an acronym of NBF of non-banking financial institution, and we trace back to 1960 when NBFC per se started. And at that time, we have to keep in mind that the country had unbanked sector. Most of the banks were located in urban centers. So semi-urban and rural areas had nothing available. So NBFC came in, and it started mobilizing resources from various sectors where banks were not there. And also, one of the niche, apart from lending to select sector, one of the niche that they have created was in the field of leasing and hire purchase, industrial leasing and hire purchase. They were also active in vehicle finance, gold, loans, and so many other things. But what happened over a period of time, that there has been a mushroom growth of NBFCs and many talented people came into the picture, and it started losing the credibility. There was no set norms of regulation. In other words, there was no regulatory mechanism in place. So the government of India or RBI set up in 1972-73 what they call it James Raz Committee. They submitted it, the committee submitted its reports in 1975, wherein they say the key recommendation which was accepted was that the deposit taking should be linked to NBFC's net owned fund. That was one of the things, and they also stipulated certain lending norms. Thereafter, it was going okay, but NBFCs have been growing. So in 1982, when Dr. Manmohan Singh, our Prime Minister, became the governor of Reserve Bank of India, he felt that certain streamlining is required in the NBFC, such an important role in the economic development of the country. So Professor Sukma Chakrabarti committee was formed to look at the working and give a recommendation to RBI so that they could formulate the policies. So Sukma Chakrabarti committee came up with a lot of recommendations, and all of them have been accepted by NBFCs. And it was relating to internal control and those kind of things. So it must be at the same time, it must be understood in 1981 to 1992. The NBFCs, which were around 7,000 in 1981, which became almost 30,000 plus in 1992. So a regulation was required. Thereafter, in 1992, the RBI felt that further strengthening an internal control mechanism is required. So a committee was again set up in 1992 under Mr. Shah, who was the chairman of Bank of Baroda, and he came up with some of the very important recommendations relating to prudential norm of the company, lending norms, and those kind of things. And it started moving well. Then RBI subsequently in 2017 also introduced certain recommendations, certain amendments in the Reserve Bank of India Act of 1934, Chapter 3B, which governs the functioning of NBFC. So this has been a trajectory of NBFC. But what is an NBFC? That's a question. So I would like to state that NBFCs are Indian companies registered under Indian Companies Act of 1956. And nowadays, they have to be registered under Companies Act of 2013, where the concept of net owned fund has been introduced, that for an NBFC, you need to have a minimum net owned fund of 2 crores and etc. So the process has been streamlined in that. And it is also important to know how these NBFCs, what role they play. Basically, it plays all the roles which a normal banks do, except there are certain exceptions which NBFCs are prohibited. Number one is that they are not allowed to take a demand deposit. When I say demand deposit, I mean savings bank and current account deposit. They are not allowed, they are only allowed to take long-term deposit of 12 months and above. They are also not allowed to issue checks, etc. And it has also to be understood that while the banks are registered under the Banking Regulation Act, but NBFC continue to be under Indian Companies Act. One of the important things here I would like to mention that NBFCs are not allowed to invest directly in the field of agriculture. For direct agriculture lending is not there. It is also to be noted that they are also not allowed to do the purchase of properties and sale of property business and related things. But one advantage that NBFC has is that it doesn't have to maintain the SLR and CRR ratio on the deposit that it receives uh, from the public, whereas banks have to maintain with the Reserve Bank of India certain percentage of CRR and SLR. That is one. And one of the activities which banks are not permitted, but NBFCs are permitted, are PMS. And that is one advantage. And this is basically the key difference between a bank and NBFCs. It is also, having said that, it is also, we need to understand that NBFCs have faced a lot of credibility issues because of one reason or another. In 2018, we had the unfortunate incident of one of the large NBFCs turning bad, ILFS, for example. So in 2019, February, RBI harmonized the, and prior to that, there were NBFCs, somebody will do lending, somebody will do leasing, somebody will do hire purchase, etc., etc. They're free to do as per their objectives. So what had happened, the RBI came with the guidelines in February 2019, where they said, they talked about that there should be only 12 categories of NBFCs. And also, they said they put some guidelines for streamlining the working of the NBFCs. So these 12 NBFCs, they were activity-wise. One of the first one was infrastructure and credit companies, NBFCs, which is basically a general NBFC. And we had thereafter we had a specialized one like infrastructure NBFCs, infrastructure companies, which were basically 75% of their loan book should be in the infrastructure field. Then the third one, we had the new concept of debt, long-term debt funds came into being, known as infrastructure debt fund. There are hardly 3-4 in the country. They were giving long-term loan. Then we had the fourth one, you can say, was, I'll just take the names for the purpose of clarity. The fourth one was basically investment companies. The role of the investment companies was basically to there were no acquisition of shares and securities. That was the main activities of 90% of the share and security. They were known as core investment companies. Then they had a new set of company for NBFCs, NBFCs for microfinance. Then we had NBFC for factoring. Then we had mortgage guaranteeing company. Then we had ARCs. Then we had account aggregator. Then housing finance companies were also given, the regulatory role was given to National Housing Bank for the purpose of the housing finance NBFCs. Then a new concept was P2P, peer-to-peer, which is a technological based lending and putting your application and lending and other things. Then a new type of also, the last one, which is not very popular, but it was formed, was non-operating finance holding company. So the last one was only for the purpose of only those holding companies who used to go for a banking license. So this was the this type of this was done, and now I'll come to the role of NBFC. Having explained the type of NBFC, the role of NBFC is very important. The NBFC has been playing a very important role in the India's economic development. See, if you look at from the point of view of its contribution to GDP, it is around 11% plus, even today. And these are 11.6 to be precise, as on December 2020, as per RBI. So this is very important. And whatever I will be talking now, I'll be talking only based on the NBFCs which are registered under RBI. So, in having said that the growth has been 11.6%, it has also to be understood that NBFC has always grown at double digit. So it's a very good sign. In 2012, 13, 18, 19, it was 12.2%. So even in the depressed market condition, its growth has been over 11%, which is really very outstanding and spectacular. As on December 2020, the total loan portfolio of NBFC was 17.31 lakh crores. It also had an investment of about 2.03 lakh crores. We have registered NBFC of 9,507 as on December 2020, as on March 2021, as part of RBI. And viewers will be surprised when I say them, out of this 9,507, only 64 NBFCs are deposit taking. So there has been a huge restriction on the deposit taking NBFCs. And then we have NBFCs which are non-deposit sector, but they have a asset base of more than 500 crores. What they call it as SI. Yeah. There are 292 numbers, and NBFCs of non-deposit taking small NBFC which has assets of less than 500 crores are about 9,123. It I would like to mention when I going through this figure, some astonishing facts came to my knowledge. Was that deposit taking NBFCs, their loan, in the total loan of 17.31 lakh crore was only 14.5%. And 83% of the loan book of total loan uh, was taken over by NBFCs, non-deposit taking, which have asset base of more than 500 crores. And the remaining NBFC of 9,123, their share was only 2.3%. So small is not beautiful in NBFC. Yeah. It has to be reasonable size. It is also, I must point out that out of total loan book of 17.31 lakh crores, the major shares of general NBFC who are in general loans, etc., is about 50.3%, and 45.8% is in infrastructure funding. So infrastructure is gradually increasing its share because they have a large ticket size, unlike the other loans. So it has to be very clearly understood that general NBFCs, not the specialized one, they command about over 50% market, or almost or little over 50% market, and next is 45.8% by in infrastructure, and rest is small other things. Now, having told the loan thing, I must say that it will be interesting to the viewers when I bring to their knowledge that that how this been what are the liabilities? We have talked about assets. So what are the liabilities of this NBFCs? So only 38,000 crores have come through public deposit, and rest have come through which is 17.6 lakh crores have come from bank borrowing. I mean through the borrowing, and borrowings are bank borrowing, commercial paper, secured, unsecured, and those debentures and those kind of things. And it also includes FDI, private equity, and ECBs and other things. And the figures that I have is on December 2020, which says that out of 17.6 lakhs crores, 52.7% are secured loan. Secure. So the NBFC have given securities to the lenders, to the banks and other people. And 47.3% are unsecured. So when we say unsecured, it could be commercial paper, it could be debentures, and things like that. So that is basically the breakup of these two. There are Before I go further, let me also tell the viewers and the listener that profitability of the NBFCs have been under stress. One of the reason is the RBI putting a margin of 6% between what you take and what you lend. So the return on assets has been was 2.3%, and return on equity was 12.7%. But it is in a economic like ours, this is fairly acceptable, and there are scope, which means that there is scope for improvement. About 44 general NBFCs, which are publicly listed, which are listed in the stock exchange in India, and their market cap is about 7.09 lakh crores. Then we have that investment companies, NBFCs, which have which are 30 of them are listed, and they have a market cap of 3.9 lakh crores. And housing, there are 11 housing listed companies, and they have 5.6 lakh crore is the market cap. So this is generally the landscape of NBFC. And some of the challenges, now having understood what the NBFC have been playing, it's NBFC has been facing lot of challenges. Not during the pandemic time, prior to pandemic also, liquidity has been a big problem because banks were hesitant to lend to this financial intermediary institutions like NBFCs. Recovery was a problem. There was a problem of stress assets, which is almost 5%. The stress asset of the bank, stress assets of the NBFC. Then the COVID came. COVID further, they had to give the moratorium in the first wave. And despite the stimulus of about 45,000 crores by way of ECGL in the first stimulus of 20 trillion, which was given by the government, the 45,000 ECGL went to NBFC sectors. And that has eased to some extent the liquidity of the NBFCs. But they always face problem. They always face problem. They have to recycle fund. Their margin is always under stress because if they borrow at the high cost, they have to lend at the high cost. So at times they have to compromise on the quality of the assets. Here, some of the silent features of NBFCs are that they take a very quick decision. That is what is a very striking feature. A second striking feature is that they are still catering to in the urban and semi-urban areas in general lending, where the reach of the bank is not there and where the bank's requirement of documents are not there. Although nowadays all the NBFCs are required to comply with the KYC norms and all the internal control and other things, and they cannot outsource many of their functions. So this is the basic landscape, and I believe that NBFCs, the governments need to do lot of things and RBI needs to ease a lot of things in favor of NBFC if going forward. One of them is that they have to create a very robust bond market. They have to give a certain relaxation in listing the NBFC to access the private funds, public funds from the market by listing. There are 5, 6 companies who are planning to raise funds in next 6 to 8 months' time, and they are looking for a conducive market where they can do that. And what has happened to e-commerce, etc. Most of the money is going to e-commerce and other things. So people are market is not very receptive. Another area of improvement that they need to do is that they have to bring digitalization and fintech in their system. This is very important that they have to be very tech savvy, all of them, in terms of storage of their data, in terms of they are doing it, but they have to invest that. One another thing that government should do is that give them easy availability of fund, both by way of cheaper rate of interest as well as by relaxing certain norms. That is debt equity and other norms. They should be slightly different for the financial intermediaries. Another area is what you call co-origination of loan. The loan should be co-originated with the bank. Suppose somebody needs 100 crores. If the bank is not there should be NBFC should be made part of the consortium lending for term loans and things like that. Then we have they have to NBFC also have to do a lot of internal work. They have to strengthen their internal control mechanism. They have to reorient their business, both in the long term and the short term. Short term also because still the economy has to stabilize, and third wave may come, may not come. They have to be prepared for that, and accordingly they have to resolve for their business. Have to be there. They have to be self-reliance also. That is important. Then they have to give attention to what kind of returns they are giving. They have to be strengthen their monitoring system of their assets and timely repayment of their loans. That is one area where they have to increase their follow-up within the framework of the banks, of the lending and recovery norms. They need to reform with the time, and they have to reinvent themselves. So there are 4 R's are very important: resolve, resilience, return, reform, and reinvent. Going forward, India is still an unbanked area, and there is a vast scope for giving loan to various sectors. See, microfinance is one area where a smaller ticket size is very small. That is there. And one thing I forgot to mention, that the banks get the refinance of the loan that they give to their clients from the Reserve Bank of India under the refinance scheme. But NBFC, they don't get that. So government has to think, RBI has to ensure or evolve a scheme for refinancing facilities to the NBFC. This is, to my knowledge, is an important issue for the thing. I see much stronger. RBI, the NBFC has come out much stronger with every crisis, be it in 2008, 9, 2016, and even after slowing down of the economy, because their management is hands-on management. And with the introduction of technology, they can do wonders. Mechanism is there. The staff retention policy is very good. They are also now diversifying from the vehicle loans to from leasing, hire purchase, and other things which were their forte. They are going to different things, and with the harmonization of the activities of the RBI, with the setting up of the specialized NBFCs. Now, specialized people, personnel will be in each activity. The one NBFC will not be doing all kind of things. They will be specialized for peer-to-peer, for investment, for other things. So, way forward, going way ahead is that I see a very bright future for NBFC, and if NBFCs are equipped to change and meet the changing needs of the economy. That is their strength. They have to rely on their strength, and if they get some help from the government side, they will be enough. Chris Kumar, I think I have, in nutshell, I have explained the thing, and I'll be open to some questions if you have, because this is what I felt is the, in nutshell, this is what is the landscape and ecosystem of the NBFC in India.
True, sir. It's really very great to hear you. As when he starts speaking on certain things, the data which is coming in. Probably you have taken us from 1960 to till today, when the NBFC is born and what kind of contributions they are. And it was very heartening to listen from you that the non-banking finance companies' contribution is for people those who are not up to the level to meet the requirement of the banks. So the category itself was very clear and important to the development of the economy, which goes without saying that you have touched the subject means you have touched the grassroots of the subject. Yes, that was the success of these NBFCs. How they have developed is people those who are not having those kind of privilege or papers to meet the requirement of bankers. Uh, I I should say your own words. You should provide banks are like bank, and yes, things happened in the country, which is there always regular. Things are changing now, and now I'm seeing a lot of scope for the NBFCs. When you said NBFC and when it the start of NBFC, I recall my days with Sundaram Finance Limited, which was started in 1954, not in 60. So even much before the banking NBFC started, the founder Sri T.S. Santanamji, he had envisioned that there is a scope of company, there is a role of a finance company in Indian economic system, and the banking system, and he chose to explore that with Madras Motor Insurance Company Limited, which was there in the 1954. They are the pioneers, rather. It's a privilege to work under a great person like T.T. Srinivasaragan, the managing director of Sundaram Finance Limited. I happened to meet him, and in Road Transport Ministry, he used to come and give so many advices. He's advisor to the government of India in many financial aspects. So it's a blessing to be with them and learning what an NBFC is and how it works. So Coming close to that, yes, now we have some questions which generally, as a student, first I should start with the questions. Sir. Give me the privilege to the questions. Banking system is now regularized. Now, small banks are merged with bigger banks, bigger ones, to make it more effective and process. How do you see the impact of merger and acquisition in NBFC market? Because they are contributing more to the economy.
See, here I have two things to say. As you know, being so engrossed with the NBFC yourself, that in India we have NBFCs like Power Finance Corporation, Indian RDC. They have a charter, and they are their focus is almost the same. If you look at the focus of the Power Trading Corporation or Power Finance Corporation or rural electrifications and Indian Railway Finance and other things. So merger of those based on activities are easy because they have a good corporate governance. But when it comes to a family owned, small family owned NBFC who is doing 10 car finance or 200 loans, personal loans, and etc. Yeah? So there has to be a meeting of mind of the promoters. So that is very important. If they two people want to join hand to make it big, it will happen. Happen. But meeting of mind is very important. And whereas in more like semi governmental institutions like PFC or power trading or Indian Railway sponsored IFC, etc., yeah, is easier because they have a corporate governance and nature of activities. So a power focused infrastructure thing can do that. Even similarly with L&T. L&T is virtually in all verticals of NBFC. In the infrastructure, they are there. They are in the holding company. Is there? There are so many things are there. So it will be there, but here again one has to think big. One has to think only when the challenge will come, this will come. This has to be there. Similarly, P2P, they are very small. So if they join 5 or 6 joints, they merge themselves. So they become a good one. So a PAP who is based in Chennai cannot meet a demand of something in Ludhiana. So it has to be a geographical based also, which was originally the concept in 1960 or prior to 1960. You see, as you very rightly mentioned, that in Sundaram Finance, they started the financing of the vehicles because they were also the what you call the dealers and
Similar to this.
and,
Sundram
and
Motors.
other. So they were providing one services under one roof. So similarly, if it is a power focused one, NBFCs, they can convert it into one. RBI has tried to do that first, yes, first step that they have harmonized the activities of the NBFC. So I don't see much thing. If for a smaller one, it's a meeting of the mind, or a time is not far off when the bigger one will buy the smaller ones.
That has to happen. That has to happen.
So
Thank you, sir.
yeah,
Now, you have mentioned on how much is the contribution to GDP by NBFCs. close to 12% of contribution is made from NBFCs to GDP of the country. So vast. With see the rural people getting employment opportunity in NBFC or in other way, the employment opportunity created by NBFCs in this country, how it is going, sir?
See, one thing I forgot to mention, that one of the role of the NBFC has been employment generation in the rural and semi-urban center. When they started, they were employing local people for mobilization of resources and giving them training, sending them to the field, and do that. And also, there was no system of verifying the credibility of the borrowers. So this field staff, local people, they used to help them in taking a credit decision by doing their by visiting them, and it required huge manpower at that time. Now, unfortunately, one agrees or not, because of the technology and availability of Aadhaar card and so many other identifications. But that is again limited to urban and metro areas. But rural areas, the seminar area, it is going to be an employment-oriented NBFCs, and it will generate employment as it has been generating. In fact, it will augment its forces.
Thank you, sir. The reality, you have also said, touched upon the stressed uh, portion of the. There is a common platform called the ARCs, Asset Reconstruction Company. How do you see their role in building this NBFCs? Because NBFC is contributing to the country's GDP. How does this ARC, Asset Reconstruction Company, contribute to stability of this NBFCs?
See, ARC, if you review the role of ARC in the Indian economic scenario in revival of the sick units and other things, what then ARC do? They buy the assets from the bank, distressed assets from the bank. Lot many changes have taken place. Now NCLT has come.
NCLAT is there.
NCLT has come, and this what do you call IPF? What that role? IBC, the IBC, and you mentioned IBC and other. So it is there. So ARC, again, we have to create a specialized ARCs or ARC-like institution for a smaller NBFC for smaller loans, which could be done, because ARC is catering to only large loans, and they are buying from the bank in bulk. And NBFCs, they are not in a position to sell their assets to smaller assets to that, because their size is already small, and if you sell them further at a discount, the NBFC find that chances of recovery directly is better than going to ARC and selling them and forgetting it, because that will further improve and their margin. They are already working in a very tight margin, especially after RBI has said that there should be not more than 6% difference between borrowing costs
Borrowing and lending.
Lending costs. So this is a very thin difference. You have a lot of administrative costs involved on that, and the interest burden if you add on that. It's a very thin margin.
Thank you, sir.
In this connection, I see FDI. There has to be a role of FDI. Bigger ones are playing the role. They are getting the FDI, the bigger ones. But the smaller ones are slightly hesitant to go to overseas market, mainly on account of two reasons. One is that if the hedging is going to be there, because their loan is in rupee. And if the investment, that's why I said, if they take equity, equity will come in through AIF if it comes. It will come in Indian rupee. So that option has to be there to reduce the cost. Because equity, if there's a equity that gives you two leverages. One is that equity does not cost anything. Number two, if your equity increases, you can increase the bank loan because your capital, paid up capital increases. So that is one area which should be focused.
Thank you, sir. Now, let us go to the questions from others also, because I should not take the entire question and answer session. I love to, but
Oh,
still. Sir, how do you see, we have Captain Ravi Shankar asking this question. How do you see NBFC providing long-term credit facility to the MSMEs under Make in India scheme?
see, MSME, the RBI, the NBFC has been providing loan to MSME. And if you look at the figures, MSME, I have the numbers for MSME. Just a minute. But anyway, let's not go into that number point. Let me answer to the gentleman. What he's talking about a long-term loan. And long-term loan, when he means if he's talking for more than 5 years, bank is a better option from the entrepreneur point of view.
Yes.
And NBFCs are, unless it is a specialized or infrastructure, when they have a long-term funds. NBFCs, they don't have long-term funds. For 2 years, 3 years, they roll it over. So they are, I'm talking about general NFC. NBFC, and because those NBFCs can only do 75% of the, and even the bigger ones, which are specialized ones, can do. So NBFC, unless they have the access to long-term funds, is very unlikely. We have to change. We have to change the NBFC have to change the
Borrowing pattern.
funding pattern, their own
Borrowing pattern.
borrowing patterns to be able to give it to MSME. They will be happy to give because they will be able to nurture the loan for 5 or 6 years and can get a good return. And one thing I must tell you, borrowing from bank at 8.5%, and they commit at say 12.5% to a borrower for 5 years, and in the meantime, once his business stabilizes, he goes to the bank and gets it refinanced.
True, sir.
So,
There is a risk factor.
There is a risk factor. So at this point of time, I don't see it's a very viable option.
Thank you, sir. Now we are coming to the second one, sir. This is from Mr. Satish Malik. In the field of microfinancing, where do you see NBFC stand vis-a-vis public sector banks or private bank?
See,
Sorry.
public sector, the question is from Satish Malik.
Yes, sir.
Okay. So I know Mr. Satish is a cousin of mine. So, okay. And he's a veteran, army veteran. So microfinance is a specialized subject. And the ticket size is very small. The NBFCs find it, even though a specialized NBFCs have been created in 2019 but NBFCs giving a loan to microfinance-based companies, microfinance-based candidates, or borrowers seeking microfinance of 50,000, or the first tranche has to be 50,000, and the second tranche has to be only 1 lakh. It's a too small ticketed deal. So unless a little bit of agriculture is added for an NBFC, yeah, then only a mudra loan and other things will be viable for NBFC, because the banks are able to refinance it, whereas NBFC is not able to refinance. That is a difference. That is why it's not a very fit case for banks, for NBFCs.
Since you have touched that subject, sir, I have one more question, sir. How do you see how effective is securitization of NBFCs vis-a-vis bank?
See, again, securitization is banks are looking forward to. NBFC would be happy to, because that will create liquidity.
Yes.
Of the receivables. And that and in view, a specialized thing has already been created, NBFC factors. And so any borrowers, if they want to factor it, get their receivables financed, they can always approach the NBFC factors for getting their receivables discounted. So NBFC is already playing that role. And so far, coming to your question, how I have already mentioned earlier that no refinance or securitization facilities are available
For
to
NBFCs.
NBFCs.
Smaller NBFCs, rather, they are facing that.
Yeah.
Sir, it was very nice time you have spent with us, sir. It was very knowledgeable, very informative on the part of learners like me, even today. Set of uh, data which you have put in, and the way you have taken it right from 1960 James Raj Committee and Dr. Manmohan Singh's initiative of Professor Sukhmoy Chakraborty. There are so many things you have explained, sir. The FDI, the present government's initiative in FDI in 2016. These informations are untold, because most of the people, those who are in finance, know what is NBFC. But in general public, yes, the awareness is not there. We tried something like that to give a thought for everyone to think of NBFC, what is it, and knowledge about imparting about NBFCs. It was very nice for sir. Lunchtime. I know you are a follower of timings like a Fauji or a uniformed personnel. It was very nice having you in this webinar, sir. Thank you so much for being with us. I should thank our Chancellor, Dr. K. M. Annamalai, for giving this opportunity for us to run this kind of webinar. Yes, sir.
Yeah. Thank you to explain in a